All right. Welcome everyone to this session brought to you by treasuryXL in collaboration with Embat. The session has the beautiful title AI Treasury Applications for Microsoft Business Central and F&O. My name is Jan-Willem Atteveld and I'm the co-founder of Automation Boutique. I have a background in corporate treasury, and for the last few years, me and my company have been building treasury automation solutions and AI solutions. And I'm looking very forward to discussing today with our panel the application of AI in the systems treasurers and financial teams already use. We will try to keep it very practical and discuss a lot of different questions. Like, for example, how can treasurers use AI that is already available, like the ones in the Microsoft ERP systems? I've read about a lot of different tools which are already baked into these ERP systems, such as different kind of agents, bank reconciliation tools, and Copilot that allows you to ask questions about your data. We will also dive into what kind of data really matters for treasurers and how can they use it better. But also what kind of data is still missing for the ERP. And how close are we to answering questions like real-time cash flow forecasting? Let me introduce to you today's panel. First, we have Udo Rademakers. Udo is an independent interim treasurer and a returning expert at treasuryXL. Actually, Udo and I go way back, and over the years, I've lost track of how many treasury teams he has helped transforming their treasury and also set up treasury from scratch at different companies. He has seen a lot of different corporates from the inside and has a very real-world and hands-on view on how things should be done in treasury. Udo is very passionate, and I think he's even calling in from his holiday address. So Udo, thank you for that. Second, we have Theo Wasserberg. Theo is heading the UK expansion and Ireland expansion of Embat, and he is bringing a lot of ERP system experiences to this webinar. He has held senior positions at SAP and Delaware, and is also very passionate about data-driven finance and automation. So two very knowledgeable guys. Before we start the discussion, I would like to invite you all to ask questions if you have any during the session. We will try to address your questions during our discussions or at the end of this session. If we don't have sufficient time, we will try to follow up after this session separately. So let's get started. And before I will start the discussion with our panelists, I would like to ask you two short questions during the poll. So you would see now any moment the question it should start appearing on your screen. And it's a multiple choice about the AI adoption in your company. So we would like to know where you stand, so it can help us guiding our discussions a little bit based on where you are. So please give us your input. So we'll give you a little bit of time to look at this, answering this question. All right. And then we have a second question as well. Results are quite divided. Some companies are actively experimenting with AI, but not fully operational yet. Actually, the majority. About 17% are actively using AI. That's very nice to see as well. Question 2, where do you see the biggest AI opportunity in which use case? Of course, it can be multiple, but we would like to know do you see the most potential? All right, then we're gonna round up the poll. All All right. Well, the majority of you indicated cash flow forecasting and liquidity planning as the number one use case, 50%. So that's quite clear. And the second comes automation of processes. So thank you for your input. We will try to take that along in the discussion. First question to you, Theo. Let's start with the basics. Many companies use both an ERP system and sometimes a separate treasury management system on top. From your experience, extensive experience with the ERP systems, how do you see the relationship between the two systems? Where does the ERP end and the TMS begin? Can you take us along in your vision there?
Yeah, absolutely. Well, firstly, thanks for having me on. It's lovely to be with treasuryXL and to talk to so many treasury experts and fascinating results from that. And it tells you that you've got treasurers on the line because the cash flow forecast came out ahead of some of the repetitive processes in the ERP, and it would reverse if we had the ERP guys on, I think. So I think that the timing is good here because you can see that people are starting to adopt this stuff in treasury. ERP has challenges on everything cash. That's not a Microsoft problem. That's just a state of the world of ERP. And then TMS is often thought of as a semi-separate set of tooling. Often that tooling is a set of Excel spreadsheets. But if there is a TMS tool, then it's relatively static because it often doesn't have a kind of live connectivity either to the financial products or to the ERP. But there is a fundamental connection, obviously, between those two systems. And so bringing them together is important. Where one finishes and the other starts is a bit of a gray area, and there are Venn diagram. But increasingly, as Treasury becomes a strategic function of the business, you want to bring those two closer and closer together. And in our vision of the world, there's really no major gap between them because the data should flow seamlessly. And the ability to consolidate information, is critical. You don't want people going in and out of entities to gather data. Payments is a good example. If you make a payment, it still has to be reconciled in your financial system. And so you've got to get more transactional finance talking more to Treasury and having that stuff flow seamlessly. So the world is changing a lot in ERP and TMS. You can see that because of AI. You can see that because of the advances in regulation. You can see it because of the advances in connectivity. ERP is going to continue to have gaps on cash. It will just continue to have gaps on things like connecting to the banks. It's not the core focus of ERP development. And so you need to find a way to bring these things together in a holistic way. So the line between ERP and TMS is blurry and getting more blurry, but that is fundamentally solvable with the tooling and the AI and capabilities that's now coming to the market.
Right. Thank you for this perspective, Theo. Udo, building on that, do you think treasurers can rely solely on ERP systems for their treasury management, or do you see that there are still practical functions missing that make a dedicated TMS all the more necessary?
Are you on mute, Udo?
That's a basic error. Thank you so much. So thank you so much, Jan, for your introduction and having me on. What I think is that an ERP solely will not do the job. So we need in Treasury a TMS, depending on the size of the company, obviously. So for me, an ERP is really to handle the day-to-day flows, AR, AP, accounting things, procurement. But the TMS will pick up where the ERP will, basically starts running out of breath. So cash visibility across all the banks, liquidity planning, also what Theo mentioned, right? The payments parts, this is something a TMS can handle mostly much better than an ERP system can do. Also there it depends again how many banks do you connect. Some banks are really easy to connect to an ERP, but other banks, especially if you have more, it's more easy to have the TMS in the center of the organization. And if you do with FX, multi-currencies, with hedging, with debt management, swaps, interest rate products, you name it, right? I think you need a TMS for that. So that's basically, in short, the answer.
All right. Thank you for that perspective. We will go more into that a little bit later. Theo, well, obviously you worked in the with a lot of ERP system vendors as well. So you're very familiar with the data structures, etc. And what kind of data do you think that you typically see in Microsoft Business Central and F&O that is basically a gold mine, could be a gold mine for treasurers, like the data that is often missed, but can really help treasurers, like for example, in their liquidity planning, cash flow forecasting, you name it. What kind of data or data connections, more real time, can they benefit from?
Yeah, absolutely. So you got the first one, which is getting the data into a much more live state. There is obviously a ton of data in the finance system that you as a treasurer want to pull into your planning, into your forecasts, etc. First thing though is to get that view up to a live point. So, having a live connectivity to the bank and having a live connectivity between anything you're doing in Treasury and your finance system, I think is the first most critical thing. You have got to get the transaction data from all of those different finance sources and be able to consolidate it in an effective way before you can even start to do clever things. But there is a ton of stuff that sits in the finance system, which Treasury will most likely use to some extent, but doesn't get the full value out of. And so the obvious, things here are everything that's sitting in the AR/AP ledger, all of those open documents. If you have a committed liability, you obviously want to feed that into your cash flow forecast. You know when that cash is going to go out because that document has a due date on it. Now you might, the forecast date might be a little bit different to the due date, but you really want to be able to feed that into your forecast, and you really want to be able to feed that into your forecast as close to real time as possible. So often when I'm speaking to treasurers, there's quite a big lag time between, the data being available in BC or in F&O and that data really being visible in the cash flow forecast, because they may be doing it on at least a weekly lag, and it's a static dump of that data. And ideally you want to join those up. The other thing that I think is hugely valuable, and this you'll make friends with the transactional finance guys in your business, is you release a payment on a file from your ERP and it gets rejected by the bank, and then everybody knows that pain of having to go through the reversal flows, right? When you get the connectivity right, it's only paid when it goes out of the bank account rather than when your XML file is created. So trying to just take some tangible examples where if you can join these things up, not only do you get a better view of the data, better ability to forecast, but you also just remove a lot of the operational headache from the day-to-day. So, just to summarize, there's a ton of data that could be better used, and there's a lot more connectivity that would help make that data more usable as well.
Yeah, that's very interesting that you mentioned that. Of course, we want to have as much as real-time data as possible, and reduce the time lag of data we're looking at in our, for example, cash flow forecast. But Udo, if you look at that, like the practical reality you encounter in a lot of corporates, like how often do you still see that decisions are based on outdated data? So, for example, you're looking at yesterday's balances to take a decision now. How often do you come across that, and do you see it as a problem that needs to be addressed?
Quite a few questions, but to answer the first one, yes, I think most of the corporates, they are working with end of day balance of the day before. The other question which you ask, is it a problem? From my point of view, not for the normal business, so to say. So, it's not that with real-time data, I have a better strategic view what to do, where is the company moving to. But if it comes to investments, it's perhaps really good to have really real-time data. If I know that flows are coming in and see at 10, 11 o'clock in the morning that $1 million or $2 million is coming in, I can invest more into money market products, or the other way around. If I'm indebted, I can perhaps repay my RCF. So therefore, so from a treasury perspective, it makes sense to have real-time data. Operational in most of the businesses, even T-1 data, it's still doing the job from my point of view.
And yeah, related to that, like when we want to successfully build AI applications within Treasury, Udo, do you think we need real-time data, or do you think an AI can work with yesterday's data in order to give you the proper guidance on this is your optimal thing you need to do right now? Or do you see it as a problem for an AI to function correctly, that the data is outdated?
I think the AI can also function with data from yesterday's data. It will not make a big change from my point of view. I don't know how Theo sees this. Perhaps it's also a good question to ask him.
Well, I see it a little differently, but the AI can function with whatever data you give it, can function with last year's data, right?
Mm-hmm.
But the value, I guess, is in moving from. I think often when we say yesterday's data, it's not just that there's a bit of a lag, but that the data is really static, right? And so for me, it's not the whether it's this morning or the cutoff time last night. It's that we have a dynamic view of what's happening in the business, and I think that's where you really improve the decision making. AI will work with whatever data you give it. It's really about how you give yourself a dynamic view that you can really play with and model and consolidate and make that data more usable and practical.
Mm-hmm.
Yeah, good point. Well, Theo, the topic of today is Microsoft offered ERP, and Microsoft, of course, big tech, so they have a lot of AI experience in-house. These ERP systems also offer very rich collection of data, company data. What kind of functionalities are available today for companies using these systems from which they can have some quick wins? I've read about some AI agents living within, for example, Microsoft Business Central, a sales order agent. I've read about payables agent, but also an AI that does better bank reconciliation. Can you take us along what is available today and how companies can benefit from this and your experiences with these functionalities?
Yeah, and AI in ERP is the topic not just for today, but every day for the last year and probably for the next couple of years. It's the big one. There was a great Walters Kluwer study in May of this year, and they were asking Office of the CFO, what percentage had implemented an AI agent, and in May of this year that was 6%. This was a pretty big study, and there were 38% that had plans to implement something over the next 12 months, and we're talking about just implementing a single agent. So I say that just to frame where we are. There's a huge wave of this coming, but actually there's a big gap between what we kind of know is available or is coming available and people actually doing this and doing it in a more holistic way, doing it across functions and capabilities rather than a single agentic tool. So I'm obviously biased. I'm probably going to have to say that a few times in this talk, but I think there are some challenges, in terms of rolling out the AI. It is true there are some great things coming out of Copilot, right? If you look at what they're going to do around reconciliation, I think the potential for that to be really powerful is great, and for it to be consolidated into the system. It's taking a lot longer than I think anybody would have. I mean, hopefully we're getting close to it now, and I think you'll see that is true of many of the agents. The AP agent is very powerful. But my big challenge with a lot of this kind of the rollout that the ERP providers are taking, including Microsoft, is that the onus is really on you in the finance team or you as a treasurer to kind of figure out what agents and how you want them to fit together and design the flows to some extent. And I think that creates a lot of friction in terms of how you adopt these AI tools, right? And it just doesn't need to be that complicated. The flows that we're talking about in treasury and finance are, for the most part, pretty standard. And they need to be packaged and delivered across functions in a holistic way. If you look at treasury, it is not enough for me to say we need to just improve reconciliation or just improve payment anomalies. It's the ability to look at a function like Treasury within finance and say, how do we, with multiple agents, take you on a journey from A to B and improve this area as a whole. So there's lots of capability in Microsoft. That's not to downplay what's available and what's coming, but I think the adoption lags, right? Or clearly the adoption lags, right? You can see it in the data. So even if the AI is amazing, you've still got to get the data into the right place in order to drive this, right? And that's what we were talking about yesterday's data or current. And there's a big, big lag between the theoretical capability and the theoretical capabilities that are coming and what people actually utilize in practice, even if it's available, what they're able to deploy and utilize. So great capabilities out there, but I think I'd encourage people to look kind of more broadly across the function.
Yeah, so is it fair to say that it's not just toggling on an AI and it just works, but it still requires quite a lot of implementation efforts on the corporate side to get it running and doing the right things, which will be fitting for your company? Is that fair to?
Yeah, I think not only is there implementation effort, but there's also a lot of effort to just think about what it is that you want to adopt, right? You should be able to go and say, hey, we work in a Treasury department. We know what the flows are in Treasury. We know what the challenges are. We know where the pain sits. And say, we want to fix Treasury. And so, I mean, certainly at Embat, that's what we're doing. We're trying to say, hey, here is a packaged approach that you can take to your business that's highly adoptable, that's quick time to value, that doesn't require all of the implementation headache and effort, or the very narrow sort of cherry picking of items. You want to be able to pull multiple things together, thread these things together. The reality is that all of these agents need to talk to each other. It's not enough to just do payments. You have to do payments plus reconciliation plus your cash flow forecast. You don't have to do it all at the beginning, but you've got to have a plan for how they're going to talk to each other.
Okay, thank you for that. Well, we did a poll at the beginning, and cash flow forecasting and liquidity planning came out as one of the main use cases where our audience is expecting it to offer the most benefit. Udo, as we know, we are in Treasury for many, many years, and we've always seen the researchers like cash flow forecasting being on the top pain points for treasurers. Well, there are some tools available also in Microsoft Business Central and F&O that do part of your cash flow part of your forecasting is not your full cash flow forecast, I think. Do it partially and extrapolating historical data mainly. From your experience, how useful are these AI-generated cash flow forecasts in these modern ERPs, which offer these kind of AI functionalities baked in? Do they add real value? Should treasurers use them in any way, or do they still miss the mark? Can you share some light there, or what you think about these?
Yeah, I wish I could. That means I never worked with an ERP system, and normally as a treasurer you work with a TMS system. So not with the ERP as such. AI is rather new. So the companies where I worked before, they don't use AI for cash flow forecasting. And it's perhaps even worse. What you often see in Treasury is that the cash flow forecast is still captured manually by each finance manager across. I see Theo already agreeing with that one. But across the globe, every finance manager is putting on their own cash flow forecast. I mean, this is not the topic, right? The topic is not cash flow forecasting of this webinar. But what you see in general is that the finance manager doesn't know exactly the business. It's very hard to forecast flows. It's not their hobby as well to capture cash flow forecasts. It's boring work in a certain way. And you often see mistakes in it. So what I believe is that AI can do their perhaps better job than many people can do in cash flow forecasting. And treasury management systems can really help with it, and also finding out if there are weird things, weird changes, it can detect it, which I think you as well, Jan Willem, in the past we built some balances and checks in Excel sheets to see if there's a weird thing going on, we will see it, but AI can detect it straight away and can even populate it and forecast it, and only the treasurer, the finance manager can agree or adjust it. So yeah, from the ERP system, I don't know what they can deliver. I know what TMS systems can deliver.
Yeah.
Can I add to that, Jan Willem? Because I think um, the reality is that although there is, and this is the gray area of where ERP and TMS start, which is a lot of ERPs have some cash flow forecasting capabilities. The reality is that everybody's just doing it on Excel and has been for the last 20 years. No one actually does, not many people do their cash flow forecast in ERP. There are things that you still want to function manually, right? As a treasury, you're always going to want to play with the model. But there are things that AI is really good at. So it is very good at predictive analytics on revenue. It's very good at predictive analytics on things like salaries. If there's seasonality in those line items, there's no documents associated with those line items. So you want the ability to combine ERP data, open committed liabilities. You want to be able to combine the AI predictive, and you still want to be able to manually input. And once you've done all of that, you want to be able to consolidate. So, just what Udo was talking about, you're often sitting having to consolidate multiple forecasts from business units all over the place. And the ability to systemize that and have those models roll up so that you can fully consolidate or partially consolidate across a group is incredibly powerful, right? If you can do that right. So yeah, sorry, I just wanted to jump in with that.
No, very good points, Theo, and well, I agree with both of you. And I think the way forward is, as Udo, as you mentioned, like if the cash flow forecast data is gathered on a very in a very decentralized way for larger organizations, then it's even if those finance managers, as you mentioned, don't really know how to do it, I think AI can play a great role there as well. But the trick is, I think, in combining the data that you have with the data that you don't have, where AI can help you filling in those gaps. And I think that's quite essential. At the end of the day, indeed, it's about combining the different data sources in the right way. And I think especially from a user experience, like how you can help these finance managers putting that together and then rolling it up to the group level. Yeah, I think there's some really nice wins there where technology can really help, and especially an AI agent. Yeah, so yeah, thanks for sharing your perspectives on these. Theo, so we already went into it a little bit, but for the companies actually using the Microsoft ERP suite, is there something like you said? Well, it's still some implementation effort. Nonetheless, is there something you would advise our audience to really look into today? Like what can be a great starting point or like a quick win to this? Well, maybe you still it's worthwhile to spend a few hours looking into this reconciliation, or is there something that might not be turned on by default, but you would still think, well, it's worth it to check it out and activate it or implement it even?
Well, I obviously have a massive bias here, so you can take my answer with a pinch of salt. We have a market because of the gaps. I do think there are things in Microsoft that are really worth looking at. I think what they've built around AP is really clever. I think should definitely go in and investigate that. And I also think it's really worth investing the time to keep up with what they roll out. Microsoft do invest a huge amount of money and effort in developing tooling and agents, and so it is worth staying abreast of the trends and the developments that they make. I think though, to some extent, it really depends how complex you are as an organization, right? If you are 1, 2, 3 entities and you're 3 or 4 bank accounts, the reality is it's difficult to make a business case. You can do this stuff manually. You can wait for Microsoft to bring some capability to you. You can manage things on Excel. The problem is if you've got real complexity here, if you're 5 or more entities, if you're 10, 20 bank accounts, if you've got credit cards, you've got PSPs, then you need to think holistically. It's not enough to just say, well, I like this agent. You need to think about how am I going to, in the long run, transform Treasury and roll out AI across it, rather than just waiting for sort of individual agents which have some value in them, but you want to think across the flow. And if you pick a single agent, it's too limited to get that kind of real business case from. So, you might start with bank connectivity and reconciliation and then move through to payments and cash flow and do that in a sort of way that you bite it off. But I think there's too many blinkers at the moment where people see an agent that looks cool, they adopt that agent, but they haven't maybe thought as much about how are we going to transform Treasury end to end over time, in a practical way. So definitely worth looking at the Microsoft stuff. Certainly AP and certainly all the new things they bring out. They are very clever, but think about how complex you are and think about where you want to go over the next year, 2 years.
All right, that's a clear advice to look at it more holistically. Another topic I want to discuss a little bit with you guys is I've the last month I have been building some AI agents, and I'm really blown away with the stuff you can do. But it all depends on how good of results you get, on how well you have your data ready and organized. So I'm wondering myself, maybe Udo, you can share some light there. What do you see at the corporates you work with? Are they ready to? Do they have all their data readily available, organized in a nice way, so that it is the enabler for developing such use cases where AI agents can really help with cash flow forecasting, help with process automation, help with other use cases. In my experiences, it all depends on the relevant data and how you configure it. Maybe Chris, to you, Udo, what can treasurers do to prepare for these kind of use cases? Because I think there's a lot of heavy lifting or preparation you can do in advance in order to go faster with AI in a later stage.
It's a good question. What I see in many corporations that the data is actually not clean. So I mean, it can start from missing bank accounts until currencies mentioned in the wrong way. I mean, you name it. I've seen basically everything. But if you work, and perhaps you as well, Jan Willem, but if you work with Excel or you work with VLOOKUPs or this kind of things, then you already think in a structured way how to manage your data. So if that the cleaning of your data is basically not up and running or not in place, you can hardly start with AI, I would say. Although AI could perhaps even notice that things are wrong. So if you upload data, it will perhaps even say, okay, we can clean it up or something like that, right? But I think that's really the starting point, really making sure that you have your clean data. But at the other end, if you want to work with AI, I think we should really move away from manual islands of Excel, that you have all your data in a structured way somewhere in your server. What I think treasurers are struggling with is that many data is captured in other departments. So if you are not the owner as a treasurer of data, whatever payment terms or AR, AP counterparties, you name it, garbage in, garbage out, you will also receive the outcome based on not clean data. So basically I would say cleaning up the data is really the first thing, and then AI can start working it like human beings. That's my vision on it.
Yeah.
Does that answer your question?
For sure it does. Theo, this sounds like quite a big undertaking for companies, especially treasurers, to combine data from different sources. How easy is this to get right, or for company, or how hard? And do you have any practical tips for treasury teams specifically on what to focus on in order to get the most out of AI and AI agents in a later stage?
Yeah, well, obviously with us, it's very easy, Jan Willem, and we get it solved in no time. No, the reality is it's complicated, and you've got a lot of silos of data. I think there are some obvious ones that you've got to solve, and that is fundamentally live connectivity to banks and or financial products, can be PSPs, credit cards, and it's live connectivity to the finance systems. Right. If you haven't solved for those connectivities, you are always lagging on the data. The data is always static. It's very difficult to work back if you get problems. And so I think those are the two where whether you're going to implement AI or not, just please go and solve those, because they'll make your life so much easier.
Yeah.
You asked me about how AI is kind of coming into this and the use cases, and I think once you solve for that connectivity, it's not rocket science at that point really to layer over the tooling and the AI, and that's going to just continue to pick up pace. Increasingly, the AI is moving past the repetitive operational questions, and I think it was the second highest request in the poll at the beginning was about automating the repetitive processes. So the AI is there. You can achieve 90% of that already today if you do this right. But the AI is moving from just sort of cleaning up data management to starting to really suggest things to you, and it starts to act more like a business partner that's sitting alongside you, giving you suggestions. And I think that's where the development is. That's where you'll see this become, a real game changer, because step one is you take a lot of the operational headache out and you get the data live. But step two is the AI becomes a strategic partner to you. The AI is really helping you to become a more strategic function, and increasingly Treasury is a more strategic function to the business. And so that journey is critical, and it's the way that I think treasurers continue to grow the importance of Treasury in their organizations.
Udo, how do you see what Theo is saying? Like I know you have quite bold visions about the future sometimes. Like, how do you view the role of the treasurer, given also what Theo is saying, that it shifts to a more strategic advisor type of role? Do you see that as well happening in the next few years, or do you expect that it will not go so fast?
I see it as well, and I think AI will be adopted, and we have seen it in the poll, and it's already on the RPA was on the agenda for quite a long time. Now it's AI, and there's a lot of knowledge in clouds, in systems. We are sharing information much more, so I think that's really helpful. And if you really look back from the year, let's say 2000, right, when I work in Treasury, everything was manually. You were dealing by two telephones, etc. Good old times, by the way. But that's over. Everything's getting more automated. AI will pick up a lot of our tasks. I'm pretty sure about that. So it could be more strategic. I also think that teams would decrease in size. Repetitive work, perhaps nobody's really looking for that. So it will be more strategically. I agree. Yeah.
All right. Theo, our audience already indicated like the main use cases they would like to prioritize when it comes to AI. In your opinion, are there others? We, of course, already discussed forecasting, process automation. Are there other very straightforward or maybe not so straightforward things we might be missing when it comes to how can AI help those treasury departments?
So I guess maybe let me drill into some of them, because I think we say forecasting like, hey, give me some prediction of the future. But I'd like to just give some like really tangible examples of how when you get good at this stuff, the AI becomes really powerful. So we talked earlier about the ability of AI to do predictive predictions of, say, revenue or salaries, things that are seasonal. But if I take an example of, say, the due date of the invoice is the 31st, you may not have noticed, but all of the historic payments fall on the 25th because the payment run of that business partner is the 25th. Now, that's difficult to spot in the data in a business with thousands and thousands of transactions, but that is a really easy thing for the AI to spot. And so you'll have all of these small things layered into, forecasting. Forecasting is a big topic underneath, where the AI is going to say to you, hey, I don't know if you noticed, but you've set the forecast at 31st, but I'm pretty confident it's not the 31st. I'm pretty confident it's the 25th, right? It's just one small example, but if you imagine how many hundreds of thousands of tiny examples there are like this, that's how you move from a world that is super operational to a world that is super strategic in Treasury. And those use cases exist absolutely everywhere. I think it's a bit like Hubble taking a photo of the darkest part of the night sky and finding that there's millions of galaxies in it. right? There's just like an unending level of depth that you can keep applying the AI, and it will continue to automate. So it doesn't matter whether it's cash flow or in payments or anomaly and fraud detection. When you keep digging and digging, you find these really powerful, tangible use cases.
All right. Thanks for sharing this very practical example. I see one question from our audience, and that is mainly related to data. The question is, and Theo, I think you're an expert here as well. How do we quickly get to a clean slash quality data situation? Like maybe from more conceptually, and not talking specific tools, but what would you advise to this, the answer to this question? How would you?
Well, I'm glad you said that because there's obviously specific tools I'd love to tell you about. But I think there's a couple of things. There are tools out there that allow you to get good enough, right? That allow you to consolidate data in a live way, and then start to go forwards in a more clean, structured fashion. If you have mess in the historical data, that is quite a big project. And the question is, how critical is it? If we drew a straight line and we said, okay, from today onwards, data's clean, how long would it be before the AI had enough historical data to really be useful? The answer is probably only 2 or 3 months. So it's probably not the data expert answer, but what I'd say is I'd make a judgment call about how critical the historical data is to you. How much could you achieve by structuring data and tooling going forwards in a way that's much more practical? And I'm a broken record, but I keep talking about this, which is live connectivity.
Yeah.
Connectivity is everything in order to feed these models and to get the data into the right place. AI increasingly can cope with a bit of mess, right? Mm-hmm. It's not the old-fashioned way, I say old-fashioned from 3 years ago, where you had to tightly parameterize a rule and say, if X, do Y, right? You can say, broadly speaking, this is my intent with the data, and the AI can cope with that bit of extra ambiguity up to a point. Yeah. So my advice is think hard about what data you need going forwards, what tooling you need to achieve it, and maybe you don't need to spend all the costs to fix all of the historical data.
Yeah. I see also another question from our audience. I think it relates to seasonality. Like, can AI help to predict sales based on past and also live activity? For example, what goods are purchased in the beginning of the Christmas sales period in the retail business or Black Friday activity? I think, AI is, I think probably very well equipped in spotting these seasonality patterns, but it comes down to, okay, do you have the historical data where you can have the AI spot different patterns and then make a suggestion? Well, I know there's seasonality in your business, but can you share some experiences there as well, maybe, Theo?
Yeah, I mean, this is like the perfect use case, right? Which is there's no document in the ERP. It's all on PSPs, right? And it's super seasonal and variable. It's variable by day of the week. It's complicated. So it's difficult for a human to do, and it's not that difficult for the AI to do. And it's something you can do really effectively with historical data. And increasingly, what you will see is the ability to feed other data sources in. So it's pretty obvious that weather data will drive, footfall in a shop. So you can start to be really predictive about, the mix of the channel or what's gonna join in there. I'd say that's where we're on the cusp, but we haven't quite got there. Is not just predictive AI from historical data sets, but really starting to blend, multiple data to make that predictive capability really powerful.
Yeah, very interesting insights. Looking at the time, I'm afraid that it's already towards the end of this session. A big thank you, Udo, Theo, for sharing your perspectives. It was a very interesting discussion, I think. To our audience, thank you for joining us and also engaging in the poll and asking questions. Obviously, this is going to be a very rapidly evolving kind of technology, and also I think we're in the front of a big wave of innovation, also within AI. Applying AI use cases in Treasury. So I think, well, in next year we will probably have already a very more advanced discussion, and we will see the growth of utilization within companies will pick up. Thank you for joining today. The recording will be available soon, and we'll share it with you. And have a nice day. Thank you.
Thank you.
Bye.